Okay, I'm Chim Gek Hua from Top Glove Sdn Bhd. I'm CEO of the company. Today I want to explain about the master budget for Top Glove Sdn Bhd. So we are forecasted to sell 6.323 million pair of gloves in 2017, and we are targeted to sell RM1.90 per glove and equivalent to 11.8 million ringgit Malaysia. For the direct labor, we are include the production labor, the QC labor, and also packing labor, which is directly attributed to do the production process. This is total up will be equivalent to 59 cents per glove, and which is 3.68 million. For the direct material, the raw material to produce the latex to produce the glove is the latex and the cotton flock, so it's equivalent to 41 cents per glove, which is equivalent to 2.5 million. For the direct overhead, which is the expenses directly attributed to the production, is included the indirect material, for example some chemicals, and also the supervisory labor, the factory rental, and the upkeep of the factory. So all these expenses is the average is 19 cents and equivalent to 1.14 million ringgit Malaysia in the 2017. For the indirect overhead, is included all the expenses which is not directly attributed to the production process. For example, the office rental, the office salary, the sales commission, which is 8 cents, equivalent to 8 cents per glove, and 550 million. So total up all these expenses, we are getting the margin of 33%, which is equivalent to 62 cents per glove.
I am Sita Adikrishnan. I am going to present the cost estimation method of our company, which is Top Glove Company. The method we choose is accounting analysis. The accounting analysis method is mainly used to estimating fixed and variable cost is likely the approach used to identify the cost behavior. The account analysis approach required that each individual cost is examined and based on judgment is categorized as a fixed or variable cost. According to our Top Glove Company, the manager has classified the labor income as semi-variable when analyzing the labor salary ledger. The classification due to the labor income comprises the both fixed cost and the basic fixed salary and variable cost, the overtime claim. According to our forecast, the fixed salary comprises 3,840,000, which included operator, supervisor, and QA. Compared to overtime, it comprises about 916,000. So, based on the accounting analysis above, noted 20% of the total labor income is from OT, and the variable income, which is expenses. The OT claim has positive relation, which is directly related to the cost driver. The unit of glove being produced has noted OT, which is overtime claim, increase whenever there is a hike in a number. So the production is more quantity is produced. Thank you.
I'm the Chief Financial Officer of Top Glove Sdn Bhd. I would like to discuss today about the costing tool of our company. There are actually several types of costing statement adopted by each organization. The commonly used costing statements are absorption costing, contribution margin costing, activity-based costing, and target costing. Top Glove Sdn Bhd is adopting activity-based costing tool, and this is the most appropriate and suitable costing tool based on the nature of the business of the company. It's an accounting method that identifies the activities that a firm performs and then assigns indirect costs to products. An activity-based costing ABC system recognizes the relationship between costs, activities, and products, and through this relationship, It assigns indirect costs to products less arbitrarily than traditional method. The advantages of using activity-based costing are it is provide more accurate cost per unit. As the result, pricing, sales strategy, performance management, and decision making will be improved. It provides a much better insight into what derives overhead costs. ABC recognizes that costs are not all related to production and
When we
sales
talk
volume.
about
ABC, there are actually 5 basic steps involved. The first is a group production overhead into activities according to how they are driven.
Okay.
A cost pool is an activity which consumes resources and for which overhead costs are identified and allocated. For each cost pool, there should be a cost driver. The terms activity and cost pool are often used interchangeably. Then we move on. The step 2 is to identify cost driver for each activity. For instance, what causes the activity cost to be incurred? A cost driver is actually the factor that influences or drivers is to
the level of
calculate
cost.
an OAR for each activity. OAR is the overhead absorption rate, and it is calculated in the same way as the absorption costing OAR. However, a separate OAR will be calculated for each activity by taking the activity cost and dividing by the cost driver information. Step 4 is absorb the activity cost into the product. The activity cost should be absorbed back into the individual products. And finally, the step 5 is to calculate the production cost per unit and or the total profit or loss. Total activity can then be added to the labor and material costs back to our Top Glove Sdn Bhd. Based on the forecasted costing statement for the 3 main products in Top Glove Sdn Bhd, which neutral glove have a highest profit margin, which is RM 0.7869 per pair, followed by latex glove RM 0.6207 per pair, and surgical glove RM 0.5179 per pair. Neutral glove forecasted to get 34% gross profit margin compared to latex glove and surgical glove, which are 33% and 20% respectively. So after deduct the selling expenses and administrative expenses, the net profit for overall Top Glove is approximately by RM 12.6 million. That's all. Thank you.
Hi, I'm Kesavini from Top Glove Company. I'm project manager. Today I will discuss about decision making on how Top Glove management will perform differential analysis to find out how profits will change if they drop or keep some products from product line, and should they keep all existing products or drop certain products. First of all, a decision whether or not to continue an old product line or department or to start a new one is called an add or drop decision. An add or drop decision must be based only on relevant information. Just like other types of short-term decision, add or drop decision can be made most efficiently using incremental analysis. The incremental approach also helps manager focus on the relevant parts of a decision.
Main products produced by Top Glove Company are latex, nitrile and surgical glove. The total sales revenue for these 3 products are 3,900,000. The net profit is calculated using contribution income statement, and the net profit is 630,000, which consists of 650,000 of latex, 110,000 and a loss for surgical, which is 130,000. From here we can see that surgical glove shows a loss and we are thinking to remove it. When it was removed, the fixed cost cannot be reduced immediately due to fixed rental charges and labor cost. Hence, we will compare the results of keeping or removing the surgical glove. The loss is 130,000, but this losses rises to 170,000 if it was removed. Since the loss will be even greater if the surgical glove were removed, it is better to remain and keep it. In another way, the fixed overhead of 170,000 of surgical glove is split according to the sales revenue of the remaining 2 products, which is latex and nitrile. The net profit is calculated again, and the result shows overall profit of 590,000,
Compare with the overall profit of 630,000 when the surgical glove is remain in cap. Therefore, it is better to remain surgical glove. Companies should generally not drop products when overall products are expected to decline. If there is no expected changes in demand of other products, the company's overall profit will always be less if a product is dropped than if the product is kept in operations. This is due to allocated fixed costs that are not avoidable. Soft benefits, also known as qualitative issues, also should be considered as well. If surgical glove is removed, top glove may lose their customers' reputation and finally reduce their overall market share. Thank you.
Hi, I'm Premi. I'm CEO of the Top Glove Sendirian Berhad. Would like to share the performance evaluation of the company. Performance evaluation is a process to assess company's competitiveness by answering few questions such as how well the company manage its internal process together with the business operations and meets customer satisfaction as well as fulfill the shareholder expectation. There are few accounting tools in order to evaluate the performance. First is variance analysis of a master budget, which is involve difference between actual and forecasted figures. It can be done by comparing budgeted plan with prior year plan or comparing the budgeted with current year plan. This variance analysis allows cost control by highlighting the undesirable performance. This analysis more into the financial measurement. The second tool available for performance evaluation is Balance Scorecard, which gives a holistic view on this performance analysis. This Balance Scorecard includes both financial and non-financial performance measurements. This analysis derived from customer perspective, financial perspective, internal process, and as well as learning and growth perspective. Internal process and financial perspective contribute to financial measurement, while customer and learning growth perspective are non-financial elements to evaluate a company's performance. For Top Glove company, I will look into Balance Scorecard method as it performs measure as a performance measure because it strikes a balance between financial and non-financial measures. Thank you.